For some of you, sitting down and doing your accounts could be possibly the most boring thing you could think of. Looking at your accounts, looking at your financial position of your business is possibly the most important act you'll carry out in the business. It's not running your operation, it's not providing a service, it's understanding the end result through financial reporting that counts on whether you're going to keep your business, be strong, go forward, or commit business suicide. It's important you are across your financial documentation and that you understand exactly what you're looking at. A profit and loss statement is a document that records the performance of your business through time. It'll tell you whether the business is actually making a profit or not. And it's important to remember that it records this through time. So whether it's a week or a month or a year, it will help you see exactly what your business has achieved over a given time. And this can be compared with other given times to see how you've performed. It's also a document to see how the business is performing, particularly if you've had a new idea or implemented a new way to operate, so that you can see exactly the end result financially of the changes that you've made in the business. Use a profit and loss statement to measure your business, its performance, and to make sure that the business is healthy. You use the profit and loss statement to make sure that you are performing in a manner that you won't commit business suicide. The profit and loss is not a true position of cash in your business. Remember, it's a record that records performance over time. So, from the start of the week to the end of the week, the start of the month to the end of the month, the start of the year to the end of the year, it records how the business has performed. If you want to know where the true position of cash is in your business, you need to go to the balance sheet. The profit and loss shows what the business has made. When we talk about the balance sheet, and we'll talk about that in the next chapter, you'll actually see how that money has been dispersed or where it's gone. But your profit and loss is not a true position of cash in your business. So when you look at it and you see a figure, you actually don't have that money anymore. It's gone somewhere else. There's a huge difference between accrual and cash accounting. Cash accounting is simply recording the money that's come in for the particular period, for the week, for the month, or perhaps for the year, and offsetting it against the money that's left the business as expenses for that week, for the month, for the year. It gets a little bit fuzzy because you might be receiving, say, in a particular month, money that was owed from a previous month, but it's only recorded in the month that you receive it and bank it. The same with your expenses. Your expenses may relate to a previous period, but you actually pay in this period or this month, for example, so that the money that you've received is put against the money that you've paid out to give you a cash report as a profit and loss cash reporting system. Accrual accounting, while a little more complex, gives you a true position of the performance of the business. It takes the income for a particular period, so that may be cash sales made in a particular month and debtors sales made in a particular month, and create them as a sales figure and offset that against expenses that occurred in the same particular period. While the income may not have been received, or the outgoings may not have been paid, it's telling you precisely how that business has performed over that particular time. It becomes very important on how this is reported, and subject to how your business is operating. For example, if you carry a lot of stock, if you carry a lot of debtors, if you work with a lot of creditors, then obviously using a system, the accrued system, is the best way to go. But if your business is very simple, in other words, you sell a service every week and you get paid for the service and you pay all your bills that particular week, you're probably better off to keep a simpler cash system for your profit and loss. It's a little bit complex, but getting across how these work is important particularly if your business is going to grow or growing. Again, I have to emphasize, staying abreast of these accounting terms and systems is important because we don't want you to commit business suicide without knowing what's happening in your business. The most important thing to remember, apart from the difference between the two systems and being able to read the documentation and how that affects your business, is that once your turnover of your business goes over $2 million, your tax status changes so that you are reporting your tax on an accrued basis. For many businesses, this means that you will grow rapidly the amount of tax you have to pay because you are now reporting income on money you're yet to receive. So, to avoid business suicide when your business is growing, please remember you'll pay more tax generally when your turnover goes over $2 million, and you need to stop and make provision for this. The key to getting an accurate gross profit is to work on a system that's going to give you the best financial information and reporting. If you're buying and dealing with materials that you need to manufacture, if you're buying in goods to sell, you need to keep a close control on what those goods sell and what you sell them for, so that you understand exactly what the margin is on those sales of those items. If you're employing labour and offering services, or labour is helping you make a manufactured goods and sell to your clients, then you must make sure that you're across exactly what that labour costs per component or per service to the client. Gross profit is where you can measure the business, and it's often a make or break. You need to be across your gross profit. You need to understand this, and you need to be measuring it as often as you can to avoid business suicide. Wage costs are far more complex than they look. It's not simply taking somebody's weekly wage and considering it as a wage cost. A wage cost, yes, is the money that's gone out for wages and PAYG and superannuation and work cover. But it also needs to be seen in the context of what legislation is in place that allows that employee to take holidays, time off, and also the other additional add-on costs of keeping somebody who works for you. Wage costs are not just the money you've spent, and wage costs are not necessarily the amount that appears in your profit and loss, so that you actually have to sit down and look at productivity time and work out your wage costs that way. For example, if you have an employee, you pay them for 52 weeks a year. That's 52 weeks times their gross wage times their superannuation plus the work cover. But generally they're going to work somewhere between 40 and 45 weeks a year for all of that money, which means if you take the weekly wages, multiply it by 52, then multiply the superannuation into that, then add the work cover into that, you now have to divide that figure by the number of weeks they're probably working, and then the number of hours in each of those weeks that you think they'll be working. So a wage figure can go from $25 an hour or $35 an hour and jump up to $45 an hour or $55 an hour, the true wage costs. So when you're looking at your profit and loss and you see your wage costs there, get your pen out and write down another figure, because you should have calculated what your true wage costs are. A lot of businesses can commit business suicide simply because they're not across or making provision for holiday pay, sick pay, downtime, and all the other costs that relate to keeping an employee working for you. So, get across your wage costs, get to understand exactly what they mean, and in this way you should be on top of your wage costs and allow that every time you look at your gross profit. Maintaining the material costs of your business could be quite complex or quite simple. It'll be simple if you buy a product and sell it. You can count the number of items you've got and calculate through what you paid for those items what the cost is on those items that you've sold. Most simple accounting systems will allow for this. It gets far more complex when you have to buy a variety of items and you manufacture an item to be sold to a client. Have a think about this. How complex is doing the costings of the goods that you're selling to a client in your business? And think about how you can project this through your accounting system. Don't commit business suicide by not being over exactly what materials cost in your business to sell to your clients. For a lot of businesses, it's important to know the profitability of each client. You may be extending a large amount of credit to a large client and actually find out that for the level of profit you receive, it's just not worth it. You may have a smaller client that you're making a great profit on, and you need to now stop and focus on that client and see if you can grow that particular account. Your accounting system, your profit and loss, should be able to be set so that you can take the sales per client and offset that against the costs per client. That is, your sales to a client less the costs of materials and less the costs of labour will give you the gross profit per client. Most popular accounting systems can do this. So, one of the ways to avoid business suicide is to be across the people you make money from, as opposed to the people you might turn money with. Remember, getting over and getting to understand who you make the best profit from is an important action that you can carry out in your company.
How do you calculate the profit of every product and service?
Like calculating the profit of each client, it's very important that you calculate the profit of each product and service. This is that each product or service... Didn't do it again.
How do you calculate the profit of every product and service?
Like calculating the profit per client, it's important to calculate the profit of every product or service. Whether your business has a small number of products and services or the product and services add up into the thousands, it's important to know where you make your money. You don't want to be supplying products or services that simply do not make a profit. Calculating the product or service is simply taking the sales per product or service and subtracting the costs of supplying that product or service, usually materials and staff costs, and finding out exactly what the net profit or gross profit is of each of those products or services. This allows you to analyze what you should be doing in your business and what you shouldn't be doing in your business. Don't commit business suicide by selling products or services that you simply do not make money out of. You're using your profit and loss to peak performance when you know you have all the information at hand. You can feel your business pulse at a financial level. This takes time, it takes examination, and it takes you getting the correct knowledge to understand how to put this together. It's not a case of having your bookkeeper or your accountant produce a profit and loss for you. It's about you understanding exactly how your accounting system works or should work. So you should have a pile of questions of how do I measure, how do I measure, how do I measure? Your profit and loss system is going to be a great tool to help you not commit business suicide. It's going to be a great tool to help you make a profit and achieve what you want. But you have to make the effort. It's so important that every business owner makes that effort and gets across exactly how to create the best profit and loss reports. Your net profit simply tells you whether you're going to create wealth for yourself or not. If you're not making net profit, if it's not growing, then why are you in business? Your net profit is all about your achievement and what you've done financially in the business. It should be growing, it should be stable, and it should be quite clear to you that it's always going to be maintained because you're using this document to make sure you're selling the right products to the right people in the right market. The profit and loss statement's dynamic. especially if you completely understand how it's made and you've had a part in designing the way it's going to be reported to you. But it's not the only management accounts you need. So have a look at the other chapters and get to understand what else you need in the way of management accounts and financial reporting to not commit business suicide.